Hey guys, welcome back on the channel. So in my last video I showed you how to invest in crypto blockchains by selecting the most profitable liquidity pools, but you might still be wondering, okay, how much can I earn? So that will pretty much depend on ranges. Here on PancakeSwap, let me show you. So let's come here on top pairs. This is a USDT wrapped BNB pool. This is the pool you want to have exposure to if you want to invest on Binance blockchain itself. Of course, your exposure will be completely tied up to wrapped BNB. USDT is a stablecoin. Likely it will not depeg, but you're mostly exposed to the volatile asset here of the pair, which is wrapped BNB. It has deep liquidity over $50 million. The volume today is lower than the liquidity, so we're on a low day, actually yesterday, because these are past results. And if we go on here on the pair, we can see that the fees will very much fluctuate over time. These are the more intensive days. On days like this, depending on how tight your ranges are, you can easily earn 1% a day. Think about setting ranges, and let me show you by clicking add liquidity. Now, a couple of things that will influence your APR. You see here V3LP, this means that it is a concentrated liquidity pool, and then there's the fee tier. The fee tier will definitely influence your APR. This is how much traders will pay for using the pool. There's more fee tiers you can choose from. This one has 0.01%, and that's also why only 8% of the people depositing here on PancakeSwap on this liquidity pair choose this pool. Or should I say choose this fee tier, because it's less rewarding. As a trader, you want to use these pools because it's less costly to you, but as a liquidity provider, you want to earn more, and that's why 92% of the people use this pool fee tier, 0.05%. This tends to work really well. I'm not sure why it's showing 0% here on this one. You can definitely find these 0.25% pools, and in my experience, they also tend to perform really well, even when we're talking about blue chip assets. Usually we will see pools with this fee tier 0.25 or even 1% with more risky assets, because that's one of the ways to make it worth for liquidity providers to take the risk of providing liquidity to a more volatile pair. So stuff which has lower market cap, those types of assets will be more traded in this type of pools with a higher fee tier. Now, most of the volume here for this pair on PancakeSwap usually goes through these 0.05% type of pools, but in heavy market conditions, when there's a lot of trading activity, you will see this 0.01% pool also having a lot of volume. The thing is, if you account for two different pools, one on this 0.01% and another pool on 0.05% fee tier, and let's say they have the same TVL, the same volume, so this would be much more rewarding. The lower the fee tier, the higher your volume to TVL ratio would need to be to make it more competitive, okay? And that's why you also see these predetermined ranges to be very tight. These types of pools, in order to make up for the lower fee tier, usually will need to have a tighter range just to balance it out, because a tighter range will also give you a higher APR, right? And that's why we see on the 0.05% fee tier pool, we have different ranges here. Of course, you can change that manually. It's up to you. If you want to be completely hands-off, you can always go full range. Although they give you this warning here, efficiency comparison, full range positions may earn less fees than concentrated positions. And if I click I understand, now you see the APR just went down to 1%. While before, even if you go with 20% range, the APR is 12%. And if we go to this 0.01% pool, we see that with a 20% overall range, it will earn us 14% APR. So back onto this 0.05%, you see I just selected this 10% range, so 10% on the downside, and upside it makes for 20%. The APR is higher, 26%. So in this case, when would my position be out of range? So let's say I would deposit my liquidity on this pool, applying this range. What would happen would be, if BNB's price drops more than 10% or it rises more than 10%, I would go out of range. When that happens, you stop generating fees. As simple as that. This is what you need to know about ranges. The tighter it is, the higher your APR will be, the more you will earn. But of course, likely you will go out of range more often. And this is true for whatever blockchain you want to invest on, deposit on, whatever liquidity pool you want to have exposure to, okay? If you're wondering how can I determine the ideal range, that's what is called backtesting. And you can use other platforms to do that. For example, we could use METRIX Finance. I showed you how to do that on another video, but let me show you quickly again. So this is the dashboard of METRIX Finance. It's showing us all the pools that I selected on PancakeSwap and on BNB chain. And now we have this wrap BNB USDT pool that we just saw. This is the same pool. The difference is that we're using METRIX as a tool to have access and set up liquidity positions on PancakeSwap, okay? So whether you are using METRIX or Krystal, we can see what happens with Krystal in a second, but whether you use one or the other, this will always use PancakeSwap's liquidity pools for this specific case, all right? So this is the price chart and it has a calculation day here for the past 30 days. If you're using METRIX Pro, which is a paid version, you will have access, I believe it's up to 1 whole year of backtesting. Since we are using the free version, the time frame here only accounts for the past 90 days, which is plenty of time. I mean, 3 months. So let me go here and put 90 days. So we can see here in the price chart now that we're tracking everything since February the 1st all up to today, May the 2nd, all right? And the blue line just shows us how the price has been moving for this time frame. The red dashed line is the current price, the green dashed line is our upper range and our lower range, okay? We can set the slider here on the left and just increase or decrease that range, widen it or tighten it as we will. If we do the range like this, it will definitely have been generating fees for the past 2 months. The thing is, we never know what the markets will do in the future. Nonetheless, backtesting is a way for you to check how price has been moving and how potentially it can be still moving in the future and set up ranges accordingly. Now, if you want to simulate also how much you will earn, you have here your deposit amount. You can put $1,000, you can put $10,000, you can put $100, and the fees will automatically show up for the next 24 hours. In my experience, metrics tend to be a little bit conservative in showing you the estimated fees, but actually I do prefer that. I do prefer to have a pleasant surprise in having more fees generated than expecting something and then having lower fees able to be claimed. That's just me, okay? But you can use the deposits here just to simulate how much you can earn. And if you're not happy with it, you can then come here, tighten up a little bit more. We're gonna sacrifice these tops here. So eventually, had we deposited with this range, when the price had been this one, it would have been out of range. But this is also for you to see, it doesn't really serve you to be chasing yields, to have a very tight range and just chasing the price. Likely you will lose money if you're doing that. And as a beginner, go with a wider range until you get comfortable with how all of this liquidity providing stuff works, okay? So we just set up a tighter range and we see now the estimated fees went up. So if we go for $1,000, this would generate $1 per day, 10,000, $12 per day. Pretty much we doubled what we were getting with the previous range, right? But this will be tighter, it will be more risky. If it goes out of range for a day, a couple of days, I wouldn't touch it. If after a couple of days I'm still out of range, then yeah. Then I would look at the chart just to see if it would be a better option to set up a whole new range altogether, okay? So you can use METRIX to do this, you can use also Krystal. So let's see how this would work on Krystal. I'm gonna go on hot pools and now I'm gonna select the BNB chain. We're just using the BNB smart chain as an example, of course. All the information here can be applied to Solana, to Ethereum, whatever blockchain you wanna invest on, okay? If this is still too confusing for you, go check out my previous video, I'll link it down below, on how to invest in crypto as a complete beginner, where I showed you the best pools, the ones that have more volume, more activity, and overall they're blue chip assets. So not only you're investing in a more stable asset, but also in an asset that over time it generates more volume. Okay, so let me scroll back up here. I knew this pool would be showing on the best blue chip pools of the blockchain. Really good APR for the past 24 hours. So let's click it. Now it's showing us all of the pools that have this specific pair, USDT and wrap BNB, right? We can find this pool in different dexes. These 3 ones are on Uniswap, Thina, also a leading dex on BNB chain, and now we have the more popular ones on PancakeSwap. You can deploy your liquidity in a given pool, so you can come and click here, for example, This pool has a higher fee tier. This fee tier tends to perform well. In here, if we keep scrolling down, you can still access your simulation, how much liquidity you want to deposit. There's also the ranges here that come into play once again. So let's go again with around 15% on the upside and downside. Okay, so this would earn us 50 cents for the next day. Now don't worry if this is showing different results compared with METRIX. Like I said, I think METRIX is more conservative, but I kind of prefer that. But it gives you nonetheless an idea whether you use Krystal or METRIX Finance. The thing with Krystal is that now they recently updated and they're showing the tracker here for the price powered by DEX Screener, which is in my opinion a tremendous upgrade from what they had before. So we can go to the daily candles. These can virtually track also very far back to the past as long as the liquidity pool has been operating, and it's free of use. So you can get more information on Krystal versus the free version of METRIX. Although METRIX is a great tool, guys. I have a link for it down below. It's an affiliate link, but it will get you your first 5 days for free with the pro version. Although, let me tell you honestly, as a complete beginner, probably you don't want to invest into tools that you cannot make the most out of it. Now, once again, we have the full range option here. If you don't want to worry about setting ranges and have the pool on full on passive mode, this is what you want to do. Go full range. But you see, $1,000, it will earn you approximately 5 cents per day. Once again, this will fluctuate, but for example, let's use here a wide range, which accounts for minus and plus 30%. So this means that if BNB's price goes up 30%, you're still in range. If it goes down 30%, you're still in range. But this is a blue chip asset. It's more solid. It's less likely that BNB will crash 30% in one given day and doesn't bounce back up. And the same goes for it's unlikely that it goes up 30% and then it doesn't trace back a little bit because people take profits, okay? So with the wide range, the same $1,000 deposit would earn you 28 cents in fees. Narrow range will be much tighter. We're talking about 5%. I think as a complete beginner, it's better for you to go with wide range. Set it and forget it. But of course, if you're playing with smaller bags, if you're just trying to get started with $100, it can be quite tempting to go with narrow range. Even in this case, I would say stick with double digits ranges on the downside and on the upside. Stick with 15%. Try it like that. Let's see how this would work. So with this type of range, $100 would earn us 5 cents a day. And that translates on a monthly basis to $1.50 and $18 a year. That would be if these conditions would be constant, which they will not be constant. Price will go back up, it will go back down, volume will be different, you'll go out of range. You know the drill, right? One of the coolest things about Krystal is that you can set in an automation, but as a complete beginner, stay away from this, okay? It's better for you to learn the deal by having a wider range than just be chasing yields. Likely you will lose money if you're just chasing yields, okay? So I like to have the price range set in percentage, but if you want to look at the chart and insert what you're seeing here directly on the price range, you gotta turn off the percentage, and I'm gonna put the price here on BNB. Now it's showing us how many dollars one BNB costs, and I'm just gonna look here at the chart and say, okay, so on early February we had this down low, but let's say I wanna have the minimum price at 525, so I would set up that here, 525. Then the max would be something like this, 750. So I'm going to insert 750. And this would be potentially a range that we just set by looking at the chart and backtracking for all of these months. And potentially, had we have this range in place since November, we would have been generating fees non-stop. So if we go down, we see that these are the estimated earnings for this chosen range. It is a solid range because if the price keeps tracking as it has for the past months that are shown here in the chart, we would be generating fees. Regardless, guys, whatever you do, if you go with a narrow range, even if you want to see that money working more for you, you see with a narrow range, $100 will earn 16 cents in fees. Even if you want to do this, don't keep chasing yields. don't readjust your position a couple times a day. If you're having to readjust your position every single day, you're playing with a very tight range. If you are just checking your positions daily, that's good. But if you have to readjust it every other day, it's probably still a very tight range, okay? So test it out for yourself. Start with 15-15, for example, then tighten or widen it after a couple days if you're not happy with the results. Of course, this is a more hands-on type of approach to providing liquidity. We can definitely use stuff like Beefy. Beefy has a ton of different vaults. Let's launch the app so I can show you. You see all of these vaults, they operate in all of these blockchains. We could go here again on BNB chain, find that same pool because I'm pretty sure they will have the USDT BNB pool. Here we go. So these are liquidity vaults operated by Beefy. They use the same liquidity pair on PancakeSwap. You see, this is on Uniswap. These couple on the bottom, they are on PancakeSwap. But Beefy runs the whole thing. This is going to be also hands-off management from your side. They will take a percentage of your profits as their cut. So that's also one of the cons, so to say, because after all, you need to pay for the service that they are providing, right? There are other protocols, not only Beefy. I mentioned Beefy because they are very reputable. They've operated for years, very tight security record, but you could use also Gamma, for example. So this is Gamma. They operate with many different exchanges, so we would just need to find out here PancakeSwap on the list. Here we have it. It only has one pair on PancakeSwap, so that's kind of weird, and it's only on Arbitrum. So maybe we'll find something on the BNB chain, but by selecting Uniswap. So let's go and just source through all of the blockchains that they have here. So BNB chain, here we go. Yeah, here we have it, USDT wrap BNB pair. So potentially you could also use Gamma pools. They're not showing here the APRs and the TVL is really low. So probably all of these have been deprecated. So yeah, don't use those, but you get the idea. You can also go here on Gamma, select a specific exchange, then a specific blockchain. For example, let's go here on Thina. Thina is a very good choice on the BNB chain, and we see they have $18 million in TVL from all of these liquidity pools. So probably this is going to be your best option if you want to use Gamma's services on the BNB chain. So we have some cool pools here, wrapped Ethereum with wrapped BNB, BTCB with wrapped BNB, and here is the pool that we were looking for. 48% APR with some incentives also. You see the strategy here is a narrow range. So you can also filter things out by all strategies or dynamic, narrow, wide. So let's see what they have with wide. Okay, so this specific pool, USDT wrap BNB with a wide range, has a really low TVL. Not sure if this is still something that is operational or they deprecated it. Whenever you're in doubt, just go to their social media channels, ask the team, and if someone gets back to you on the DMs, ignore it. Probably scammers. They will only reply to you on the official chat, okay? Anyways, guys, this is a little bit I wanted to share with you about ranges, the differences between wider ranges, full range, or narrow ranges. Check out the videos I will share down under in the description for more information on yield farming, investing in crypto as a complete beginner, guys. If you have any questions, let me know in the comments. That being said, guys, thank you for watching. Keep exploring crypto. Take care, and I'll see you on the next one.